Hello, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spider if you don't hablo español, and I am super excited to announce the Art of Reading Price Section 30-day bootcamp. Now I know you may be wondering, well, Tim, we just had the Art of Reading Price Action mentorship. What's the difference between the mentorship and the boot camp? Well, unlike the mentorship, this is a month-long boot camp for up to 20 people where I will be dedicating the entire month of January to share my understanding of the ICT concepts and how to use them on a day-to-day basis. Not only will I just be sharing my understanding of the ICT concepts, but once you're inside the private Discord, you'll have access to weekly Q&As, you'll have access to weekly homework reviews, you'll have access to at least 14 tape reading sessions, and you'll have access to the private Discord for up to 6 months after the boot camp ends. And at the end of the boot camp, each individual that's inside the boot camp will have an opportunity to schedule and conduct a 1-hour one-on-one coaching session with myself. Now, the boot camp will be broke down into 4 phases. Phase 1 will be a revamp of the Art of Reading Price Action educational material. Phase 2 will begin our tape reading sessions. And phase 3, we will move into developing strategies for those that are unable to develop their own strategy. I will work with you to come up with a strategy that fits your trader identity or your trading style. And phase 4 will be a combination of tape reading, Q&As, and we will start to schedule the one-on-one coaching sessions for everyone involved. Now, let's get to the meat and potatoes. How much does it cost? Well, the Art of Reading Price Action Bootcamp will go on sale beginning December 1st, 2024 for the price of $1,000. But if you are a current member of the Gang, you have a special discount code inside the Discord right now, which you can use up until December 25th to get 75% off that $1,000. So it will be $250 for any current Gang members if you use the code that's inside the Discord. Now, for everyone else, you have a discount code for 50% off that's good until December the 14th. And that discount code is SPIDER50. Again, for everyone that's not a member of the Spider Gang Discord already, your discount code is SPIDER50 and it's good for 50% off, and you can use that coupon code up until December the 14th. Now, it's first come, first serve. It's only available for up to 20 people. So once it's gone, it's gone. Take advantage of it today, and I hope to see you on the inside. Again, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spider if you don't hablo español. Y'all be safe out in these trading streets, man. Gone. Yeah. What's going on? What's going on? What's going on? What's going on? How everybody doing this evening, man? I said, how everybody doing this evening, man? Brother, can't hear doxing nobody. Y'all put something in the chat, man. Let me know that y'all up in here. Let me know who up in here. Let me know who up in here. Drop something in the chat. Like that. Something in the chat like that. What's going on? Put something in the chat like that. How y'all doing, man? Make sure I try to speak up. Let me put on my headphones in case somebody pull up in the voice. Somebody pull up in the voice chat and want to talk. It won't be echoing. It won't be echoing if somebody pull up in the voice and want to talk to me. Now that I got myself together, good evening. If this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But also want to give you a nice hearty Thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spot if you don't hablo español. And you are now in tune to another amazing episode of, if I get my click together, the Intra-Day price action recap. Now, we'll not be before you long today because this evening is Wednesday and we have homework review with the mentees. They will probably not have any questions, so that will probably be a quick one too. So, without further ado, what's up to Hit, Learn, and Share? What's up, Rhonda Green? What's going on, Kim? What's going on, Lump? What's going on, Tish? And everybody else who decides they want to tap in. Oh yeah. As you saw the promo in the beginning, or if you just tapped in and you didn't see it, there are 12 slots left for the boot camp. There's a link pinned at the top of the chat where you can join the 30-day boot camp. If you didn't see the promo and you don't know what the boot camp is, the boot camp is for the entire month of January. It'll break down into 4 phases. The first phase, we're going to go back through a whole new teaching of the art of reading price action, the playlist that I got on my channel here, the art of reading price action. We're going to go back through the material in phase 1. Phase 2, we're going to do live tape reading every day, Monday through Friday. All right. Phase 3, we will develop entry models for those who can't come up with their own. I will work with you and develop entry models. We'll do it all as a group so other people can learn from yours. Like, hey, I never thought about that. Then phase 4, it will just be a continuation of everything, and we will start to schedule the 1-hour coaching sessions for each individual person, because the coaching sessions will be scheduled for after the boot camp ends. Then once the boot camp is done at the end of January, you will have, if you're not already a member of the gang, you will have access to the private Discord for 6 months after that. Now, the cost is $1,000 with the coupon code SPYDER50, SPYDER. You can get 50% off until December the 14th at 11:59 p.m. If you are a member of the gang, you have a 75% off code. That code will be good until Christmas. You can use the 75% off code until Christmas if you're already in the gang. If you're a part of the gang and you don't want to participate in the boot camp yourself, but you want to get it for a friend or a family member, you can use your discount code for that friend or family member. Just let me know who that person is so I'll know how they got that code, and I won't get upset and shut everything down. Also, 50% off Apex. They're not having another sale right now, but you can get 50% off with my link down there. I've been trying to figure out how to get a coupon code that sound cool, then you know it's me. But if you use my link down there, you'll get 50% off. That's enough sales. Let's get into it. 12 slots left on the boot camp. Take advantage. It's only going to be 20 people. All right? It's only right now we got 8 people. Hey, if it's just the 8 of us, hey, I'm cool with that. Right? But it's only going to be 20 people. Got 12 slots left. Take advantage. Somebody asked, will you do another boot camp? I'll never say never, but as of now, I don't plan on it. Let's get to it, man. The intraday price action. Hey, y'all check it out. All right, here we go on these daily charts, weekly charts. Remember what's talking on the pop-up last night, gang? What was talking about? All right. What we was talking about? We said that price. We got this expansion candle there, right? And so we would potentially be working inside that candle. We talked about that, right? And then we said, what could it be? What we'll be looking at? What things that we could watch to see if price was gonna, like, you want to see if price respects things. All right, look at there, look at there. All right, the daily candle came down to the daily. We said that we had that entire range, and then we had this area that could be a right, and then you would be looking at this range here if that was the case. God dog it, Tim. You'll be looking at that range there, and then that Bissy would be a discount of a retracement, and then we got a nice reaction off of that Bissy, making all-time highs. So now we have closed with the opportunity to possibly make a Bissy that size right there. All right, so now we've gone from the weekly playing out like this, coming back to that discount, right, and giving us a reaction. Now we're on the daily at that same spot. Will the daily give us the same reaction, or will the daily start to break down, right? What do? You set up your reactionary points and you let price tell you what it wants to do, right? It's nice to talk about stuff and to see it play out. See it start to play out. Just like magic. Discount PD array. Daily discount PD array, job to keep price up. Weekly discount PD array, job to keep price up. Came down to the daily, right? Stopped just shy of the weekly. Price went up, right? On the 4 hour, right? Before coming into there, we said that price had consolidated expansion, right? Was looking for a retrace, came to the daily, then popped up. It was like, it'll be nice to get a deeper retracement, but we got to watch these PD arrays that's designed to keep price up, right? Price went up, pulled down into the daily. This is 4 hour chart, pull it down into the daily, whose job is to keep it up. The daily, that's in the discount of this range right here. Boop, up, all-time highs. Just straight up today. Right? It's nice when you talk about it in advance. Set your anticipatory reactionary points, and then you get a move. Right? You get a move. Hopefully everybody was able to participate, and if you wasn't able to participate, hopefully you was able to take some, you were able to take some notes and learn something. All right, let's get into it. Let's go into some 15-minute candles, right? 15 minutes. Okay, on a 15-minute tip. All right. Don't really need that right now. All right, so here we go. This right here was the start of the day. Right there at that 6 o'clock candle. As you see here, we'll stretch this up because we know where that went. All right, that's Tuesday's daily high over there. Okay, so we had this consequent encroachment of this wick right there that was marked out. If you go back and see what wick that is we're talking about, Tuesday, right? Whenever you're looking at price, you want to look at the imbalances below price on all levels, right? We had traded down into that Bissy, right? This right here was the weekly. Let's go back and put that weekly PD array on there that we were watching, right? We're coming back here, and we were looking at, right, this was a weekly PD array that we were watching, right? Who's responsible for keeping price up? All right. And then we go to the daily, right? And price closed here on Tuesday. So in between price, right, and this PD array here, right, what do we have there? You got consequent encroachment of this wick and this daily low right there, right? This is the only imbalance we have, right? We've already traded into this BISI, right? And then we got the wick of the order block, and then we got another daily BISI inside there. If price got excited to the downside, we had already talked about that. If price got excited through this, these are the areas we are looking for price to go, right? Because whenever you got an anticipatory reactionary point, you want to know how far it can go past it and why. Okay, so let's go to our 4 hour. We talked about our 4 hour earlier, right? We talked about our 4 hour earlier, and the only thing we got here is daily stuff. We got 4 hour stuff that's below the daily stuff, so no need to mark anything else on the 4 hour besides this SIBI that's above price. If price wanted to come down, right, this is what it could react off of, right? So that's what we got marked there. That looked like a line, but that's a new day opening gap, that wick right there. The order block you mentioned at 950, I took at 1050 macro, thanks to you. No thanks to me. You pushed the button. You hear that, FC? Only you can push that button. Only you. I'm just some dude from Fort Lauderdale, Florida, who learned something and sharing my understanding of it with you all. Only you can push that button. Congratulations. Y'all give it up for FC in the chat, man. Y'all tell FC congratulations. Congratulations. I hope you're happy. Okay, so it can go for them. Let's go down to the 5th. Uh-oh, my bad. No, sorry about that. I thought I was on the other screen. Let's go to the 15. All right, so 15 minutes. All right, that's our higher time frame stuff that we got marked out. All right, this is our high. This is our low. All right, this is our current dealing range right there. Right, we came up, took our buy side, came down, took our sell side. That's our current dealing range that we're in. Okay, inside that dealing range, right, we open up here and we are consolidating there. Right, we're consolidating. So as you see, as I came in earlier today marking out my chart, this was the buy side and the sell side, right, for the overnight range. Right, the entire overnight range, that's the buy side, that's the sell side. Okay, so we just consolidated all night long, and then when we came into the 8:30 news candle right here, right, just prior to the 8:30 news candle, right, price gave us an itty bitty Judy swing. Right now, even before that, right, but because we consolidated here, right, consolidated there, got us a little wig snatcher here, right, but it ain't really a true wig snatcher because after we hit it, we just kind of consolidated, right? But in hindsight, you can see that it played out to be a wig snatcher, right? But it's got too much consolidation afterwards, so it's just still a bunch of high resistance, right? But right before the news candle here, right, price drops down below the sell side, below the new day opening gap, which means we are below the opening price of the day, right? Kissed midnight, did not get below the midnight open, came down and kissed it, And then once we pushed up, we attacked the buy side. That's our Judy swing right there. Boop. Right? Consolidate. Right? Take out the sell side. And then here, that move there, taking out the buy side, that's your Judy swing. And here on the 8:30 news, we drop back down, right? Retrace back down. Didn't make it to the fair value gap, but we did make it to the breaker, right? Made it to the breaker, made it to the bullish order block, did not make it to the propulsion block, right? So order block, breaker, inversion fair value gap, all of those entries, this news candle came down into those PD arrays, and then nothing can stop me. I'm all the way up, right? Price never looked back, right? We did go into a consolidation at 10 o'clock. So from 10 until 11, we went into a consolidation. But prior to that, it's just up. These are 15-minute candles, not one red 15-minute candle from 8:30 up until 10 o'clock in the morning. So from the 8:30 candle to the 8:45 candle, straight up. That's what you call a low resistance liquidity run. And this is what we was talking about last night on the call, where I said they will either use the CPI to attack the liquidity that you want to attack, or they will use it to attack the opposing liquidity and then move to the liquidity that you want to attack. But nobody knows which way they're going to push it. So all the thing you can do is just wait till the news come out. And as you see, when the news came out, they start pushing it that way and never let it come back. All right. So, hey, not much to talk about today. Typical CPI day. Whole bunch of nothing before the news come out. A huge, gigantic move, right? This 15-minute candle here at 8:30, right? From high to low is 85 3/4 points from high to low. That 15-minute candle, right? The 8:30 candle itself, right? Let's look at the 8:30 candle itself. Right, the 1 minute 8:30 candle itself, just that 1 minute, right, from low to high, was 41 1/4 points. So in that first minute, 41 1/4 points, and then the next 14 minutes from low to high of the next 14 minutes was 58 1/2 points. So in that first minute from when the news hit, it was almost half the distance of that total 15-minute candle from low to high. So that lets you know how fast that CPI moved in that first minute. And as you can see on the 1 minute, right, it was just up. It was a trend day up. Right. We did get a little pullback there, right, before 9 o'clock. Little pullback there, sweeping out liquidity, right, traded up, consolidated here. Got a little pullback here from 936 up until 938, pulled back into a fair value gap there, right, and blast off again, pulled back into an order block there, right. When we pulled back into the order block, we kind of consolidated there for a while, then expanded up, and then we had a bunch of little do-to-do-it in here, right. This one went into some high resistance right there, trading back down below that sell side, right, then started to expand up. Not much retracing going on, not really giving a lot of retracing, right, and then we just went into a bunch of high resistance, right, went into a bunch of high resistance going for the rest of the day, right, bunch of high resistance for the rest of the day. So the cleanest move was from 8:30 up until, just say 10 o'clock, but there was one maybe 2 entries. This one here, that may have been an entry for somebody. It was pre-market. You had 1 entry there on the 1 minute. That is, you had 1 entry there on the 1 minute after 9:30, just after 9:30. This could have been an entry, but it didn't go far. You so far extended there. This right here, the risk to reward is not worth it because you've come this far, and you're going to high resistance there. You've already taken out the weekly high at that point. So what's the use of chasing? Unless you're just grabbing a quick scalp. Anybody got anything for me? I got about 30 minutes. Then I got to go do the homework review with the mentees. Like I say, man, that's it. Nah, not a whole lot to talk about. Typical CPI day, trend day to the upside. All right.
I have a question.
What's going
You know how ICT says that usually like 70% of the time the high is reached on a Tuesday, the high or low of the week.
on? Mm-hmm.
Since we had CPI this week, would this be one of those cases where that rule probably does not apply?
Nah. The with CP when it comes to like CPI and different news like that, let me get close to the mic. When it comes to different news events like that, you want to look at them for how are they going to use them to manipulate the market to the place where they want price to go. It doesn't really it's not like you don't want to look at them as, okay, is the weekly profile going to be affected by this day? You know what I'm saying? The weekly profile is like so many other things that affects the weekly profile. You just want to kind of like understand what's the purpose of looking at how the news is going to affect it, not so much, you know what I'm saying, is it going to change the weekly profile. You want to, when you're looking at what your weekly profile going to be, you want to look at like, okay, where are we in terms of let's say maybe a market maker model, or where are we in the terms of consolidation, expansion, retracement, delivery, where are we in those, and then look at the likelihood of, are we having a power of 3 week, right? Does it look like it's giving us a power of 3 week? Are we, is it playing out, is accumulation, manipulation, distribution playing out in the scheme of where are we with consolidation, expansion, reversal, or retracement and delivery? Is it, you know what I'm saying, are those aspects of order flow playing into this higher probability of Tuesday being a low of the week or Tuesday being a high of the week? Or is it playing out to where Wednesday may be the low of the week or higher week? Or is it with Monday, like where are we in the price delivery spectrum? You see what I'm saying? That's where you want to look at that, as far as how likely is this percentage going to play out for the low or the high of the week when it comes to that, right? Not so much like, is the news going to affect that or not. The news is, I personally use news for what are the conditions going to be leading into that news, you know what I'm saying, and versus coming out of that news, right? Will it make sense?
Yes. And because I'm looking also at the ES and the YM, comparing it to the NQ. And like right now, it looks like they are both um, bearish.
And
So
then
that's why I was
you
wondering.
gotta think about it, like for the last 2 years maybe, the YM and the NQ have been opposites for like the last 2 years, right? They have been disjointed for like ever. So when they disjointed like that, it's gonna create difficult market conditions, especially for the ES, right? Especially for the ES. So what plays out on the NQ as far as a weekly profile, it may not play out on the ES, or it may not play, just like here when I put these up together. You see how the NQ is going up like this right here, like the snake lifting his head up, but the snake poking his head down. You see what I'm saying? It's like NQ is doing this, and the Dow is doing that. So they disjointed. You know what I'm saying? The Dow, we got 1, 2, 3, 4, 5 red days straight going down, and then the NQ got a red, a green, a red, red, a big green. You know what I'm saying? It's like they're very disjointed right now. So it's like looking at what the Dow is doing compared to what the NQ is doing. It's really not going to help with like just thinking about a weekly profile for what the NQ is doing. Like when you're looking at like what the Dow is doing compared to what the NQ is doing or compared to what the ES is doing, like you want to use that in the sense of like a six sister approach to which one you want to trade, right? And so, and the way you do that is you look at it and you say, okay, the Dow, right? You look at the Dow and say, okay, the Dow is coming here, right? We went down, we went up, and now we're retracing back down. So if you believe, okay, these are daily candles. If you believe that the Dow overall is bullish, right, then you would be saying, okay, we've pulled back into, right, a discount close to, we ain't got to a discount yet, but we're getting close to a discount of this range. So if you're looking at this and say, okay, if the Dow gets into a discount, I may be looking to buy off of this fair value gap and treat this as a six sister approach to coming back up because the NQ has been so bullish, right? The NQ has been so bullish, and now right here in this little area here, the ES is close to all-time highs. The NQ just made all-time highs, but the Dow has not tried to get all-time highs. So then you'd be like, okay, since we got this divergence and the Dow is going down like that, then I believe it's bullish. So I'm going to look for the Dow to play catch up and be the sixth sister to coming back to all-time highs for the rest of this month throughout the end of the quarter to see if we can get the sixth sister in the Dow. You see what I'm saying? Because it's like you want to use it in the sense of, okay, what is the overall bias? And then which one has not done it yet, right? The ES is really close to doing it. The Dow, the NQ has already done it. And the Dow hasn't made all-time highs when we're in a bullish environment. So that's when you'll be like, okay, I'm going to look at this as the six sister approach. Just same thing we did with the NQ when the YM made all-time highs, the ES made all-time highs, but the NQ hadn't made all-time highs, and we was trading the NQ as the sixth sister. It's the same thing when you're looking at the Dow to the NQ and the ES.
Okay, thanks.
All right. Yeah, but yeah. So with profiles, with weekly profiles, should I say, it's like you know what I'm saying. You just want to look at where are you in the sense of like trading, cause just like you said, the Dow just going down, right? And looking at the Dow, this is this week's candle, right? So coming into this week's candle, right, the Dow had already started retracing, right? We went up, we expanded, and it has already started retracing, right? So let's look at the Dow from the start of this week right here, right? So the start of this week right here. So matter of fact, let's take this off. We're gonna take that off, all right? And we came here, we consolidated, we went up, and then we came down. Now let's go down to a daily chart, right? So looking at the daily chart on the Dow, right? So on the daily chart, right, we said that the weekly had consolidated, expand, and started to retrace, right? On the daily, right, we had expand, like had a little consolidation, expanded, reversed, right? And then now it's looking like it's about to start retracing, and that goes in line with the weekly of consolidating and starting to retrace. So you came here, expanded, reverse, and you're starting to retrace right there, okay? And then we go down to a 4 hour. This is 2 time frames down from the weekly, right? So going 2 time frames down from the weekly, right? So now we see here on this one here that price had gone down there, and we came back up, and we started to consolidate there, maybe breaking down, right? So we may be breaking down there. And so now you're looking at it and saying, okay, let's look at the detail of it since we're getting into more price action. Let's see if we can figure out what are goings on, right? You squinch up your charts and you start looking at things there. So looking at it, you see that we have us right here. This is like your overall range there, right? That's your overall range there. Then you look at it and say, okay, we got some internal sell side here, right? We got some internal sell side there on the Dow, right? And then that right there is like the turning point, if you will, for this time frame there, right? For this time frame, that's your turning point right there, but it's inside this dealing range right here, right? So this is your parent dealing range there. So this is internal liquidity for the parent dealing range, right? And this right here would be, all right, the external liquidity for that dealing range there, right? So going into it, now you're thinking, okay, on the 4 hour, it's looking like you may be getting like a retracement also, which goes in line with what the weekly said. The weekly said consolidate, expand, possible reversals. Retracement starting. The daily said the same thing, possible retracement starting. The 4 hour saying the same thing, possible retracement starting. Right? So everything is looking like pulling back. Okay. So now once you start to pull back, right? Let's take this off, put it there, and go to our daily.
Hey, I just joined and I'm not seeing your screen. It's just black.
Oh, yeah, I want to share this out of Discord. Let me share it in the Discord.
Thanks.
All right. Yeah. All right. So then this is Monday. This is Tuesday. Right? This is Wednesday. Like coming into the week. Right? So now you're saying if this week should be giving me a retracement, right? In the beginning of the week, right? You want to see price. If price is exceedingly bearish, right? It can just slide. But if price is going to give an opportunity to participate coming into this week to get short, in the beginning of the week, you want to see some type of push up to a premium because you're anticipating it to we're looking at coming into this week, possible continuing a retracement, right? All right, so we're looking for a retracement back down, right? So now, in the sense of where you are coming into the week, right? Coming into Monday, right? You want to see, does Monday give me a push up and then come down, right? And then you look at Tuesday and say, okay, Tuesday is continuing down, right? Tuesday is continuing down. So since you're looking for a retracement, right, in the sense of what the week will be, since you're looking for a retracement, since this is the only push up that Monday gave you, and then Tuesday continued down, then you can come to the conclusion of this may be a Monday high of the week because Tuesday didn't give me the high of the week, right? Because I'm looking for the retracement, right? I'm looking for the retracement. And since I'm looking for the retracement, right, let me take these off so that those who can't see it without, they can't see it when the candles are there, right? Since I'm looking for the retracement, right? What did we say? We said this was our current price leg that's inside our current dealing range, right? And then if we're looking for a retracement, where do we want to buy it? We want to buy in a discount, right? If we want to buy in a discount, right, we don't want this to hold up price, right? We want price to push through that, right? We want price to push through that. And then we look to the left, and we see, right, that we have a mitigation block here with a fair value gap in the mitigation block leg, which became a inversion fair value gap, and it's right there with a BISI that's in the discount. So you want to see price come down to at least that. So you don't want to see this act as support, right? So coming into this week, right, you don't want to see this act as support. So let's just put lines here. We're just going to put lines there because we don't want to mark it out. So we put that there. That's the area we don't want to see act as support, right? And then we got the internal liquidity right there, and we have the bullish fair value gap right here for a possible anticipatory reactionary point, right? This is the first place we want to see price give us some kind of reason to go back up. Why? Because we're anticipating a retracement, and we want to participate in the buy in the discount, right? And this is where we want to see, is price giving us an opportunity? Yet we're not just going to buy because it get here. It's going to get to our anticipatory reactionary point. Then we're going to look for our setup. Okay, so that's how it looked coming into the week. All right, so now that we see how it looked coming into the week, right? And then now Monday, we trade down into the area that we don't want to see support price, right? Then Tuesday, we push deeper into that area, right? We push deeper into that area, okay? And looking at that area, right, we push deeper into the area and we close above consequent encroachment, but we're not giving any signs that we want to go back up. Well, Tim, why do you say that? Because Monday, right, we pushed up, then we came down, closing below the prior day's low and below this sell side liquidity there, right? Then Tuesday, right, we push down, creating a SIBI, right, and close below the prior day's low, right? And when we push through sell side, but we don't reject it, we're saying price is heavy. It wants to keep going. But if we push through sell side and reject it, that says, okay, we could possibly go back to the high that sent us there, right? So price is not showing any indication that it wants to go back up. And since this is Tuesday, now at this point, since we're anticipating going to a discount, now at this point you say, hey, it looked like we're going to have a Monday high of the week, right? Because Tuesday is not showing a willingness to keep going. So if Tuesday is not showing a willingness to keep going, you can go into Wednesday with a bearish sentiment saying, if I get a push up to some kind of premium, I will be looking for a reason to sell, right? And now we've closed like all the way at the low of this imbalance that we don't want to see hold, and we're just a stone's throw away from equilibrium of the entire price leg. Then now we're going into Thursday, right? Do we get now you can say, okay, are we going to get like a nice reversal Thursday, or are we going to keep sliding and then get a Friday expansion and maybe get a TGIF, right, coming from here, and let's say we get all the way down to tap into that sell side, right? We're gonna go tap into that sell side right there and just say, hey, do we get a TGIF, which would put us back to the high of the BISI, or back to equilibrium, right? Put us right back at fair value to end the week, right? But that's how, when you're looking at what's the weekly profile going to be, that's how you go through and use the signatures and price as price develops to say, hey, okay, how likely are we going to get this? Hey, how likely are we going to get that? The same thing we did with the NQ when we said, hey, we've gotten this low on, it's Tuesday, right? We've pulled back into this discount PD array based off of this price range where We had this balanced price range. This was a discount PDub we traded in, got a nice rejection off of it. Now that we rejected, then we could possibly be going to that high. And since we could be going to that high, right, what's in the way? What's supposed to stop us from getting to that high? We have this SIBI right there, and then we got consequent encroachment of that wick inside that rejection block to stop us from getting to that high. You know what I'm saying? What's the likelihood of this being the Tuesday low of the week, since we've pushed down, came down, and gotten down here in a discount now? Would this give us the Tuesday low of the week? Same thing we did. Yeah, where you on the pop-up? Same thing. It's the same thing. The same concept, right? You see the same concept. Hopefully that help out with that a little bit, Rhonda.
Okay, I came back because when we were on the Dow and that December 9th candle, I think it was, I think that was Monday's candle.
Right here, yes, right here.
I have to look at your screen on YouTube. One second. I can't see your screen. Oh, wait a minute. I see. Watch screen. Okay. That fair value gap throws me off because I trade fair value gaps. And so my
Which one?
eyes go
Which fair
that
value gap?
one. That one.
So
Where
coming into today. So when you come, this didn't get here until yesterday closed. So coming into today, that's when that fair value gap is there.
right. And see, for that reason, I'm thinking I would look at that as to wait for it to come back up to that fair value gap to go down. But based on what you're saying, we should be looking at the PD array below that for it to come maybe down to consequent encroachment.
It depends on the kind of fair. Remember the rules on the fair value gaps, right? It depends on what price you got. It's like I always tell y'all. It's never that simple. It's never that simple. You got to look at everything that price is telling you at the time. So, all right. So who cares about the first candle? Don't nobody care, right? The second candle gonna always be an expansion candle, and then you can have different types of third candles, right? So looking at this right here, let's take off today for those who can't see stuff while the candles are there, right? So looking at this right here, once price closed yesterday and gave us, come here you square, gave us this fair value gap, right? Okay, candle one, who cares, right? Hot dog it. Candle one. I came right on it. It's not even letting me write. Anyway, you get it. Candle two and candle three, right? What kind of candle is this right here?
So it kind of retraces back into candle two.
No kind of. Which one? It's all about the open, high, low, and close, right? What do we close in reference to that candle right there? What type of candle is that?
We close below it.
Okay, so what kind of candle is this right here?
The third candle? What
Yes.
kind
Would it be expansion?
Expansion. We expanded outside of this candle right here and closed down there, right? See, remember, this is expansion candle. Why is it expansion candle? Because we expanded beyond the low of this candle and closed below that candle, right? We ain't worrying about like what the wick's doing. It's expanding beyond there, right? And it's closing below the candle. So when you got an expansion candle as the third candle, right, you're anticipating this to be possibly a breakaway gap, right? That's your whenever you get expansion candle, you're just anticipating a breakaway gap. It doesn't mean it's going to be a breakaway gap. Remember, stacks on stacks on stacks on stacks, right? So we're anticipating this to be a breakaway gap. Since we're anticipating that to be a breakaway gap, and we're also, right, looking for a price to draw back to a discount, right, which we are not at yet. Let me get some of this junk out the way. That's just consequent encroachment of that, right? So this is our range right here that we're looking at from there to there, right? The discount is below this area right there, right? We're still in a premium, okay? So we're still in the premium, and we're anticipating this to be a breakaway gap, right? So now we already got one breakaway gap there, right, off of this expansion candle, right? Because when this expansion candle came out, we're anticipating this to be a breakaway gap, right? Price did not go back up to it. We came down and we created a new fair value gap. So now it's been confirmed that is a breakaway gap because we didn't trade back to it and we created a new fair value gap, right? So since price expanded again, right, and we're anticipating it to go here, now we're thinking, okay, I'm anticipating this to be a breakaway gap. Price is looking very heavy, right? Price is looking very heavy. We've closed below the low, no sign of showing any desire to go back up to that high, right? And we still have not made it to a discount yet. So with the bearishness intact, right, no kind of desire to go back up and make a new high on Tuesday, right? So we're like, okay, price is just really heavy, so we're anticipating this to be a breakaway gap because you got that expansion candle. Now, if price starts to show you that it wants to go back up, fine, but don't fight the bearishness on the lower time frames just because you see a PD array there, because we haven't, you know what I'm saying, we haven't come down to our anticipatory reactionary point yet, right? And so if we go into, let's just go straight down to 1 hour, since we're on a daily chart, right? We'll go down to 1 hour, right, since we're on a daily chart, and we'll look at how this day played out on, I got 6 minutes. All right, we'll look at how this day played out. And looking at the daily chart now, coming into the daily chart with detail, right, where are we in price, right? Looking at the detail of the daily chart, right, it looks like we're on the right side of a market maker sell model, right? Just looking at the detail of the daily chart. Okay, so that lends to the bearishness, right? Okay, that lends to the bearishness. So now, looking at when we created, that's the SIBI, right? This is how the day thing ended. Now we see that we came here and we had us a smart money reversal, a low risk short there, right? We came down here, traded back up to that fair value gap, dropped, consolidated, right? Traded back up to that fair value gap there. That's what created the low of that SIBI, and now we've dropped, right? Giving ourselves an inversion fair value gap right there. Now that we got all of that context, did all of that detail from the hourly chart, now as the next day opens, now we know, okay, we have come down, right? Retraced back up, taking out buy side there, trading up into the imbalance, filling in this imbalance there, right? That was the last imbalance in this area, right? There's no imbalance. God dog it. There's no imbalance up here, right? This was your only imbalance there, right? Price dropped down. We pushed back up, taking out the buy side, filling in that last imbalance, and then dropping down, right? Creating an inversion fair value gap, and then creating a SIBI there. Now coming into the next day, right now you're looking to see if price respects this, right? We look to see if price respects that SIBI, right? If price respects that SIBI, right, you're not expecting price to come back up here because we're anticipating this to be a breakaway gap, right? You're looking for clues off of that, right? If that fails, right, then you got this bullish or bearish order block there. I just went body to body, right there. And then last line of defense is the high right there, right? Let's make this. I went body to body there because the high of this right here is on that fair value gap, and I didn't want the boxes to touch and overlap. Okay, so now you're looking at that stuff to give yourself some type of detail as to, and we went there. See that we went there, we hit it, right? We came up to your SIBI, failed to get, we came into the wick of the order block, right? And then that SIBI continued to keep price down, right? It continued to keep price down on the hourly chart right there, right? So on your hourly chart, it kept keeping price down. So yes, this is up here, but since you're anticipating this to be a breakaway gap, right? You're anticipating that to be a breakaway gap. That's when you want to look at your narrative time frame, right? This is a daily gap, so that's why I'm on the 1 minute. I mean the 1 hour. You want to look at your narrative time frame. I mean your structure time frame to, you know what I'm saying, support your bias in this case, right? So you're not waiting for it to come here. You're allowing for it, but you want to see how price reacts here. This is where you're looking for your setups at here, right? Coming to here. If it hit there, then you go to your lower time frame, which would be a 5 minute on this, because we're looking at an hourly, right? You go there. Once we trade back up into it here, right? You're looking to see does it give me something I can work with, right? We come here, push up. This is just muddy. I don't see nothing clean that I would be excited about participating in, right? I don't see nothing I'd be excited to participate in. We did come back to it one more time and sell off, but you know, looking at this right here, the way this price action was, I wouldn't be too overjoyed about taking nothing here. I would maybe have taken something here, right? But I wouldn't have been overjoyed about coming back there and trying to short there. But once we took out that high, broke down, took out that low, I would have been able to take something there to go down, right? But over in this area here, I don't see nothing that would have gave me an entry. Even though we did come up here, failed to get to the body, but we did come inside this imbalance, which is inside the wick of that order block. So if you was already waiting for it, that would have been a possible entry, right? If you was already waiting for it. But if you wasn't already waiting for this and you was waiting for price to get there and then look for a setup, right, that wouldn't have been a possible entry. But like I said, if you was already waiting, that's an entry there off of that imbalance, off of that breaker combined with that order block, because this is just the bodies. Remember, the wick come all the way down to there on that order block, right? And we always want to see the wicks being the most sensitive part, especially when it overlap with a fair value gap, right? So this is the wick right there. The if we look at just the wick of the order block, we want to see the sensitivity in the wick, right? That's the wick of the order block right there, and then that's the entire order block right there. Okay, and then price went in there. Matter of fact, let's grade that order block and see. Let's grade that order block and see what's going on with that. Come on, get on there you go. Yep, right there to the 25%. That's why I wanted to grade it. Right there, that lower 25 went right there to that lower 25 of that order block. But going back there, right, come up into the order block right there to that fair value gap, to that breaker, right? This is a 5 minute fair value gap, 5 minute breaker, right, in line with the lower quadrant of the 15-minute order block. Like I said, if you were waiting for it, that would have been an entry at the lower quadrant of the order block, right? If you trade order blocks, right? This stab up back into the order block may have been an entry, right? If you trade order blocks, because you already got your breakdown there, then you stab back up into the order block, but that wouldn't have been an entry for me, right? And we come back down, trade back up, right? Anything in here that you was taking, right? This is your mandatory stop up here. This is your safe stop up there for anything inside this sell side imbalance. I mean, this buy side imbalance. No, yeah, sell side imbalance, right? This sell side imbalance right here, that's your mandatory stop. That's your safe stop. You would have been good, but you got to deal with all this drawdown, right? Wouldn't have been trying to trade none of this anyway. Like I said, I wouldn't have been trying to trade until I got over here, right? With a cleaner move, right? Taking out the buy side, taking out the sell side, and trading back into the range right there. But again, you're not looking for it to come here because you're anticipating it to be a breakaway gap because of what price has shown you. And so you have other PD arrays that's in there that's supposed to do their job to keep price down. And when price is not showing a willingness to push through them, it's showing you that they're trying to do their job. Waiting on it to insisting that it comes there is just forcing your wheel on the market. Do it make sense?
Yes, as soon as you explained the breakaway gaps, it made sense.
Yeah, just like with me. Remember when Mike was like, "Hey Tim, where's price gonna go from here?" And I was like, "I would like to see price come down here. That's what I would like to see." But all I can do is wait to see what they do with CPI and then take what I can get. You know what I'm saying? And so they didn't come down there where I wanted it to go, and price started to go up. So all I did was participate going up. I wanted it to come down here, but they said, you know what? We don't need to come down there. We already came down, took out sell side, came into a discount, and now it's time to go. Right? So it's like I wanted it to come down here, right? But since it didn't show a willingness to come past that consequent encroachment, it didn't show a willingness to come down to that low. I'm not going to sit there and say, I need to come down here. Nope. It blasts through this 4-hour SIBI. You know, this 4 hour, look at that. It went all the way up above the weekly high, right? It went above the weekly high. And remember what we said, right? We was like, we got us a balanced price range here because we had buy side and sell side delivery, and then we left that area, right? So now we're anticipating this SIBI and this balanced price range to either act as resistance or see price do what, right? We want to see it act as resistance or see price do what?
Cut through it like butter.
Cut through it. And you see that one big 4-hour candle right there, and this is a 4-hour SIBI. Cut through it like butter. When you see that right there, if you're still sitting there talking about, oh, it just gave you a signature. It said, I'm not using it as resistance. I'm cutting through it like butter. It just gave you a signature right there. Ain't no need to sit there and wait for it to come back down. Try to get a little piece of this 4-hour candle right there on that upside, right? That candle right there starts at 10 o'clock. You know what I'm saying? Try to get a little piece of that if you didn't get none of this. All right? It be giving us little clues that we be missing all day long because we're trying to force our. It's 7:06. Sorry, y'all. I got the. Are there any mentees in here? Mentees, y'all got questions? Do we need to go and do our homework review, or can we just keep talking if anybody got some questions? Any mentees in here? Tish say she ain't got no questions. Marco said he okay. Kashaya said keep talking. Is Jim a mentee? Jim, are you a mentee? He'll learn to share. Say she ain't got no questions. Hold on. Let me go. Let me do this right here. Okay, say you good. Let me do this right here. Uh, no, that's the private voice. God dog, I'm in the wrong voice. This one right here. I was wondering why it looked empty. All right. I just sent that to the mentees. I'll wait to see if anybody besides the people that's on here chime in. If not, what else we got? While we waiting to see if we get a response back. What else y'all got for me?
I have a question about that 4-hour candle that cut through there.
Okay.
At what point would you have realized that it's going to cut through there?
Well, with any time frame, it's all about the close. Right? It's all about the close. Now, you can use the lower time frames for context, right? So what you would do, right? Let's take these candles off right here, right? So this is when that candle opens, right? And this is when that candle closes, right? So now let's go to a 15-minute chart and look at it, right? And then now for this here, it was pretty clear that it wasn't trying to stop. So the candle opened here at 6, right? The candle opened here at 6. We dropped down, took out sell side, right? We took out sell side. Not only did we take out sell side, we went below the daily open, right? We took out sell side, and then we pushed up and took out buy side, right? So that's giving us a Judy swing, saying that price wants to go up, okay? Now, looking at this lower time frame, we know we got news here. The news did not trade back to the breakaway gap, right? Because we created a gap there with expansion candle, anticipating a possible breakaway gap. The news came down, did not touch the breakaway gap, and then the news took off with a strong closure up there. All right, so now let's look at here. Okay, so now we come here and we got a consolidation candle there. Right, we got a little consolidation candle because it didn't, it didn't close above the high. It didn't close back down inside the body, right? So we got a little consolidation candle there. So it's we would like to see it come back there to give us an opportunity to participate off of this, right? So at this point here, we would like to see an opportunity to participate there, right? But price pushes up and creates another breakaway gap. At this point right here, right, at 9 o'clock, we got an hour left. At this point, I'll be like, okay, this 4-hour candle probably is not going, it's probably going to keep going through this balanced price range over here. Because looking over here, right there, right, when I said at this point here, when that candle closed, we just created an inversion fair value gap. And I didn't even know that. I just based off how price was trading. But now you got an inversion fair value gap there. And now that you have created an inversion fair value gap, now you're looking for that to act as support if price starts to come back down to it. And then so here you'd be like, okay, we're not going back down. Right, we're just cutting through this balanced price range. This is just a low resistance liquidity run. That's the target right there, right? Because it's just nonstop. Because once price starts spooling, it don't like to give a lot of opportunities to participate. Right. And then however low you want to go to look for your clues, that you're just looking at the signatures that price is giving you as it go along. Make sense?
Yes, the only thing was the 10 o'clock 4-hour candle. I was thinking that once it reached all-time highs that it might go back down a little bit further than it did. I wasn't expecting it to continue up.
Okay. And that, I mean, that makes sense, right? That makes sense because you're at the point now where it's time to make a decision, right? Is this too expensive for me to buy right now? It ain't nothing wrong with saying this too expensive for me to buy. I'm not buying up here. It's got to come back down for me to participate. There's nothing wrong with that, right? So if that's the side of the fence you stand on, then you would be anticipating a pullback, right? Now, if you're anticipating a pullback, you want to anticipate a pullback at a point where price hasn't already told you something, as far as not wanting to go there, should I say. You always want to work where price has told you something, but you don't want to go against what price has told you, right? So when we said that this cutting through, why do we say price was cut? Why do we say price was cutting through here? Because what? Because this was what?
Balanced price area.
Okay, so it's a balanced price range, right? And what do we say about balanced price ranges? Right? We want them to act as what? Support, resistance, or just cut through them, right?
Yeah, one or the other.
Okay, so we had a balanced price range, right? Because we had left it to the downside. And we said we want to see this right here, right? Let's just say, I'm going to put a circle right here and say, right, this is a quarter, right? We're going to say this is a quarter, right? Okay, so this quarter right here, that's ugly. Let's do this right here. This quarter right here, I want this quarter to either act as resistance. God dog it. I want this quarter to either act as resistance to push me down, right? Or I want to see price cut through it, right? Because we came down here, right? So then we came here and this 4-hour candle cut through, right? It cut through it. Now, we wanted price to cut through that quarter, right? We said this is a quarter and it's going to cut through that quarter. Now that it has cut through that quarter, right? Is it still a quarter?
That's what I'm not sure, because it seems like, how long after a balanced price range can it become unbalanced because price goes back in there?
It ain't gonna become unbalanced. It ain't gonna become unbalanced, right? Because what makes a balanced price range? Let's go back. What makes a balanced price range, right? Tell me the steps of making a balanced price range. I give you the first one: offer, buy side, delivery. Now you give me one.
Offer, sell side.
Offer, sell side, delivery. Now, what makes it a balanced price range? When price does what? Say again.
I was saying, can I give it to him?
Hold on, we'll see. What you got, Jim? Offer buy side, offer sell side, and then what makes it a balanced price? Because it's not balanced yet. It's just efficiently delivered, right? Because you got buy side and sell side. What makes it balanced?
Does it have to go through one more time and then leave it?
It just got to leave it, right? Once you get buy side, you get sell side, and then you leave it. Now it's a balanced price range because it's efficiently delivered and price has left, right? So now, since this is a balanced price range, You can't go back and undo this. You're not undoing it. So it's always a balanced price range. It's balanced now. So now it has a job to do. And what job is that? Either resist price, support price, or price is just going to push through it, right? And if the algorithm is doing algorithmic things, right? If price does this, then it should do that, correct? So if price doesn't resist off of a balanced price range and then it cuts through it, now what should be the anticipation of this balanced price range? It should act as what now? Support, right? So you shouldn't want to see price cutting back down through there, right? So now that price has cut through it, at this time you can say, I don't want to participate, it's too expensive. I want to participate down here, and that's your right. There's nothing wrong with that. But if you still want to participate, then you want to look for reasons to participate at your balanced price range, right? So you got your balanced price range here, and this is the highest high, right, down to the bodies, right, down to the bodies of your balanced price range right there. This is the highest point of your balanced price range there, right? Because you're cutting through it. You left it here, and now you're cutting through it here, right? So this is your balanced price range there on the 4-hour chart. Let's go down to 15-minute, right? And let's put all our candles back on, right? And now looking here, right? See here, I didn't even have the candles here. All I did was mark out the highest portion of the balanced price range, right? And then looking at the highest portion of the balanced price range here on our structured time frame, and I call it our structured time frame because the 4-hour is the time frame we was looking at for the narrative of it's cutting through this balanced price range, right? And when we look at the 15-minute, right? And once we came, this is where it closed the first time, and then once this next candle opened up, right, we came here and took out that high, right? Taking out that high once we closed that. No, maybe this candle did it. But looking here, right there, this count that closed on that 4-hour candle there, we created an inversion fair value gap right there. And not only did we create an inversion fair value gap right there, we now have a balanced price range right there, right, between opposing fair value gaps, right, with opposing fair value gaps right there. There's a balanced price range right there, and this is all on the 15-minute time frame. And now you're looking for reasons for price to be supported here above this balanced price range. Now you got an inversion fair value gap right there, right? You got a balanced price range right there, and then you also have a BISI right here, right? That's in line. All of this stuff is overlapping and in line right there at your anticipatory reactionary point from the 4-hour. So price trades back down into it right there. There's your take out the buy side, trade back down to your fair value gap, stops at the balanced price range, right? Stops in the upper 25% of the fair value gap, institutional order flow, entry drill, and then you go up right there. All right, so you're looking for reasons to participate here because this is a balanced price range and you don't want to see price going down in there, and it's on a trend day to the upside, right? You got a trend day to the upside. You've cut through a balanced price range, so now you don't want to fight the trend. You either want to just sit on the sideline because you say it's too expensive, or you look for the signatures to let you know that yes, it's okay to take it, right? And if you take it and you get stopped out, it is what it is. But you just trust the process, and you know there's no way for me to guarantee it's going to work every time. But with the clues of we got a trend day to the upside, we just cut through a balanced price range, right? Because we was anticipating it to be resistance. It didn't resist. We cut through. Now that we've cut through, now it has to be support. Why? Because it's either going to be support or resistance unless they are manipulating price. You can tell they're not manipulating price. It's a trend day to the upside. We're not chopping and slopping. Price is just moving, right? So since it's just moving, we're anticipating it to keep doing algorithmic stuff. Boom. There you go right there. Do that make sense?
Yes.
All right. And I know it's like I'm just throwing a lot out there, but it's stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks, right? The more you study it, the more you keep. That's why I say go back to the beginning. Don't forget the open, high, low, close. Don't forget the swing points. Don't forget the fair value gaps. Don't forget the breakers. Don't forget the order blocks. Don't forget the power of three. Don't forget the market maker models. Don't forget the order flow. Don't forget the IP to delivery. Don't forget none of that stuff, because you need all of it every day to engage with price. Are you going to use it all every day? No, you're not going to use it all. Some days you'll use a lot of it. Some days you don't use none of it, right? But if you have it in the back of your mind, or you have it stored in your back utility belt, you can pull it out when you need it. Pause. What else we got? Let me check to see if any mentees said anything in there. Only person said something was D, and she said keep talking. All right, we got anything else? This is a good one, man. Y'all should hit the like button. I would be suspicious of it returning to the balanced price range too deep into the balanced price range, except probably consolidation. Is that reasonable? Yes. Yes, that's reasonable. Why? Because we've had a big move, right? We've had a big move, and anytime you have like a big move, right, a consolidation is probable. You know what I'm saying? Anytime you got a big move, a consolidation is probable. Ain't nothing wrong with considering we might just consolidate, right? That's why I say you can always say this is too expensive. I don't want to participate, right? But what you don't want to see is, right, price cut through a balanced price range and then just cut right back through it, because that's manipulation. That's not algorithmic. You know what I'm saying? Those are the times when we read in price and I say, at this time right here, I don't want nothing to do with it, because that's not algorithmic. Right? Doing stuff like that, when price does this, then it should do that. So if it do something and then it go back and go against everything it's supposed to do, that's manipulation. That's when you like, hey, I ain't messing with it. Like the old folks say, I wouldn't touch that with a 10-foot pole. What's going on, Hines? What else we got, man? That's it. That's it. For the people that's in the Discord, I'm going to go down the list. We got Deborah, Jim, J. Rock, Obama, Lump, and the Black Al Davis. Starting at the top. Deborah, you got anything? Deborah.
I'm good.
Jim.
I'm good.
Okay. Jim, you got anything else, Jim? Tell Sure when I said what's happening. Lump, you got anything?
What's going on, Ronnie Grande?
What's going? It's Aranya Grande, not Ronnie Grande, not
Aranya Grande.
Ronnie Grande. That's my cousin. My cousin, Ronnie Grande. There you go.
I
There
said
you go.
50%.
Okay, I got it. Big spot. That's me. You got to learn how to roll them R's. You got to say aranya. You got to say aranya. Just think about just think about when Deborah be trying to get you to run that buffer on the kitchen floor. Be like run that buffer, Sherwin. Run that
I got you.
don't run your mouth. Run that buffer.
Lord have mercy.
J Rock, you got anything? J Rock probably working.
Nah, I'm good.
Oh,
I ain't
okay.
got nothing.
J Rock would be like, man, I'm working, I'm sneaking and listening right now. Lump, you
I
got
get
some?
one way to it.
Lump. Put the oxtails down.
For the leg read, man. I'm in the casino with your sister-in-law.
Oh Lord. Oh Lord. Tell
Yeah,
tell
what the leg read? Nah, I ain't got no question. I've been tuning in. Tell her what?
tell her to cut it. Tell her don't go into the right pocket. Just play out the left pocket. Hey, the Black Al Davis, you got anything?
No, I don't. Thank you, Tim.
We don't need to pull out the crystal ball, do we?
No, not tonight.
All right, man. Hey, I think this was a good one, man. I think it was a good one. Y'all share this with a friend. If y'all think somebody might get something out of it, share it with a friend, man. Tell them, be like, hey, man, go check out this live stream. I think it was pretty dope. We had some good questions. People pulled up with. And I hope y'all starting to see, man, we talk about the same thing every day. It's just repetition. Repetition is the mother of skill. That's what they used to tell me when I was in the military. Private, repetition is the mother of skill. Right? I said, well, what's the father of failure? Drop and give me 50, private. I done always been that one. Hey, again, we got 12 slots left for the boot camp. The boot camp is going to be, we going over the art of reading price action material, right? It's gonna have the slides and everything, but it's gonna be live. I'm gonna put a poll in the diamond chat toward the end of the month to see when the boot camp participants want to do the educational part. If you want to do it in the mornings or if you want to do it in the evenings, like you know what I'm saying, after the market closes, after people get home from work, stuff like that. I'm thinking like the evenings may be a better time to do the educational part so that you can get the benefit of actually interacting just like I'm doing it right now when I go through the material, and then you can ask questions right then. I think it's more beneficial that way, you know what I'm saying, than just looking at recorded videos. And then this is 12 slots left. It's going to be every day, Monday through Friday. We're going to be doing something together for the entire month, unless it's a holiday or if, you know, some family stuff come up. Y'all already know how I am, family first. And yeah. And then after we complete that, it'll be a one-on-one coaching call with just me and you for an hour. We just sit down for an hour and we go through any fine-tuning that you think you might need after the boot camp. 12 slots left. 50% off for non-gang members up until the 14th at 11:59 p.m. Gang members, 75% off. So it'll be up until the 14th for non-gang members. It'll be $500. Up until Christmas for the gang members, it'll be $250, right? For non-gang members, from the 15th up until the end of December, it'll be $1,000. Gang members from the 26th up until the end of December, it'll be $1,000, or until those last 12 slots are gone. If those last 12 slots don't go, then it'll just be the 8 of us doing the boot camp. Because all I need is one. I don't need I just want a hip. I don't want the whole plate. I appreciate y'all, man. Y'all do me a favor, man. Go in the next room right now. Wherever your loved ones are, tell them that you love them, man. Tell them that you love them. Open up the lines of communication so that you understand their love language and they understand yours. And y'all know how to speak in each other's love language. If your significant other or your children or your friends or your parents, if their love language is words of affirmation, don't just buy them a gift because they're not going to receive that love you're trying to give them. If their love language is physical touch, don't just praise them all the time. Go give them a foot massage. Go give them a neck massage. Give them a hug. Just walk up, give them a hug. Say, oh, I love you, baby. Kiss them on the cheek. Right? Do me a favor. Take advantage of the day while you still can, because ain't nobody promised tomorrow, man. Let your family members know that you love them. Right? I just found out today, somebody I grew up with, he was younger than me. I think he might have been younger than my little brother. But I'm not sure. Took his life, man. I don't know why. All of us was on the phone together, and my brother was like, hey, it's such and such name, this. Somebody just texted me and said they killed themselves. Another person that we grew up with, gone, man. He was younger than me. Think he was younger than Lump. But another person gone. Life too short, man. Take advantage of the day while you still can, man. I appreciate y'all for hanging out with me. I ain't even gonna run the promo this time. Y'all already know what it is. The link is pinned to the top. If you want to participate, the link is in the description. If you want to try your hand at Apex, 50% off with my link down there. You get 50% off any eval that you try right now. They don't have any other promos going on now, but you get 50% off if you use my link down in the description. And tomorrow is Thursday. I don't plan on having any plans just now, so we should be back tomorrow at 6 to do the price action recap. Again, I appreciate y'all for hanging out with me, man. My name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Shout out my cousin, Ronnie Grande. Y'all be safe out here in these streets, man. Go.